It is now time for the Tiger
Hi folks,
Technician
Basil Chapman,
Hour
Tiger
with your
Technicians Hour.
host,
My
Basil
pleasure
Chapman.
to be here today, and this is the Hi folks, Basil
Tuesday
Chapman, Tiger
edition.
Technicians Hour. My
Tuesday
pleasure
at,
to be
11
here
o'clock
today
Eastern
at time. That's when I'm here. And,
Edition.
most
Tuesday
importantly
at,
is that we have
11
programming
o'clock
for you here
Eastern
at
time.
That's when I'm here. And most importantly is that we have programming for you here at TFNM right through the day, going on to, oops, not default, forget that. Just I'm doing two things at once. Okay. So straight after me comes Victor Jones, Options Hour, TD Ameritrade, and 12 to 1. Just a great show. Then you got Daryl Martin, you got Dave White, you got Ken Shreve, you got Tom O'Brien. Just a full house right until 6 o'clock. Programs then get rebroadcast. So for your education, we are right here. Love to take your calls at 877-927-6648, talking about education. This Thursday, I do my Master Trader Series Level 2 for anyone who's done the Level 1 before. It's a comprehensive overview of what you've studied in Level 1, plus I then add the newer techniques and the refinements that I've been working on in the ChapmanWave that are really 3, 6, almost a year on some of them. And these refinements, I'm kind of proud of them, because what they do is they take something like the instant restart, and the second iteration of that was called the ChapmanWave flat base restart. Now there's another iteration of that, and it's all based on the same concept of that within a couple of bars after peak D, a new higher high is made so that it starts leg E/A. That concept, what is core to the ChapmanWave is that the concepts remain the same. And within the concept, there are the refinements. And when you get ready, it's just like you practice a certain stroke, a forehand, or in golf, it's your swing. Then within it, the coach or your friend turns around and says, you know, if you just move your shoulder just a little that way, or if you move your wrist, or if you look at the ball, it's just something that's evolved over hundreds and thousands sometimes of times of repeating the same action. You just get better at it. So that's what we do in Level 2. Level 2 is where we take concepts that have been practiced by Chapman waivers, folks who have studied it before, and we add the refinements that say, hey, once you recognize this, you can't really, until you recognize it, you can't jump to Level 5 without going Level 1, 2, 3, 4, 5. So once you've done that, you are now ready for the next step, and the next step is such and such. So in this case, it is the teaching of the unconventional instant restart. And if I never discovered that there was such a thing, I would get stuck on a letter, like I'd go to a PG. For instance, here's a really good example, the RTH. And I've spoken about this for months now. I've said when the RTH starts to go, watch out below. Whoops, it's over here. When the RTH, which is the ETF for the retail index, which has been the Market Vectors Retail ETF, it's just been an unbelievable powerhouse. It's been talking about discretionary funds. My reading of the economy is that once everyone recognizes that there's been a recovery in the housing sector, there's been a recovery, the banks are now starting to do much better, blah, 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 blah. That's when you've got to be most, historically, whenever the economists, you read the paper, suddenly, economists say we're now out of the recession. As long as I can remember, that's where you start the next pullback. It doesn't have to be a major sell signal, but the next pullback. So we're at that, we're cusping right now, because the monthly chart is still in MACD. MACD is still good. Stochastics made the M formation and is pulling back in the RTH index, which is at 44.15, down 70 cents. But peak F, and I have to actually put the down arrow in because the MACD is turned negative and the stochastics way down 72%. So if it's wrong, it's wrong, but I still have to stick with my rules. And these are the rules that you're going to be studying in the ChapmanWave. Well, there are those folks who have said to me, it's all very well talking about this kind of more advanced thing. How do I get into this easy concept that you talk about, leg A, leg B, leg C? I mean, look at this. Look at the, let's just move this away, and I'll move to, let's go to one of the 200% ETFs. Let's go to the TZA. The TZA, what is that? That's a small cap bear, three times the trading. It trades at 3 times the value of the core long. So here it is: peak A, B, C, D goes to an E, and then it spikes today to an F/B. Well, the concept applies to everything. Let's go to what was the last one I saw? DZZ. DZZ is the 200% short the gold. It's the DB Gold Double Short ETN. And there it is. It's gone to leg D. So from D, I've still got another technique that I use. That's the left side, right side price time match and a cup formation. MACD's strong stochastics now reached 85%. There's a good chance that it could actually try for that spike high of the 13th of September to 438. And right now the high is 428. Is that the high today? No, the high today is 430. So it would just be another 8 cents above that. And the price time says it should hit it by about the end of the month. So these concepts are really easy. You use the MACD. How do you use the MACD? How do you use the stochastic? If you go to the front page, you'll see I've got a 2-day webinar coming up. It's called the Master Trader Series. I suppose I should really have called it How to Master Trading Series. But it's the same concept. Don't be afraid of the name that you have to be a master trader. It is just that it is coming from someone who spent decades on the concept, in this case, of the ChapmanWave. So if you are able to recognize low bars and high bars, that's the core that you need. And once we've got that, I'll be asking you, you'll be able to do it in your office or at home in your own leisure. They'll be archived, those particular, that December 6th and 7th, Thursday and Friday. Now, there'll be an early bird special to really get a bonus. You'll get my newsletter, which has a number of shorts which are doing very well. Our longs were stopped out for 2 break-evens and one which has, I believe, one position taken out for about a 6% loss. But it was, there were really good signs to say that it could have worked the way I had planned it, but I'm very strict on the stops. I put the stop in. We're out. We can always come back to this particular stock, and I don't remember now. I just haven't got in front of me if the exact time. I always put specific times for certain trades. If the time was reached to lower the buy stop, to lower the stop on this particular issue, and if not, we're still long on the cusp of being taken out. But otherwise, almost all the positions have either been break-even or profitable trades. We've done that for a little while now. I've been really, really strict about the parameters that we're entering, why we're entering, and to be able to stick with stocks that are weak and stocks that are strong, that have the potential to at least hold up. And if there is a turnaround at any point, they should be the stocks that actually participate to the upside. So now with that said, let's run the numbers. The Dow's down 237 at 13,108. The S&P is down 23 at 1410. The comp index is down 32 at 2984. And gold, I've not liked gold for a while now. I said very limited upside, but I do see the downside. Now it's at 1711, down 14, and silver's down 33 at 3191. There are a couple of gold and silver stocks that are actually still holding quite well. I'm inclined to think that they're going to be very quickly, very, very soon following gold at this particular point. So we've got platinum down 31, but now this is interesting. High-grade copper is at 3.55. So let's just go. I think that on the white chart, HGZ12, I've got my notations done. Yeah, we made a C1, C2 double top back in early September. Gone splat underneath the 200 period moving average. That's that. I'm dotting in the lines right there. This is the daily chart. Goes to peak A, B. Then I'm going to teach you the technique of how do you recognize a peak C that just fails. And I have to then put C2 and I put either a down arrow or a plus sign to say failure. Be careful. And then you've got the pattern that I talk about. These are patterns that you will learn. You get my CD introducing the ChapmanWave methodology. This is called the drop bucket pattern. Why? It looks like an upside down that dreaded H pattern, but more importantly, there's the arm of the backhoe, there's the bucket, it lifts it up, can't lift it up onto the truck, and what happens? Kaplop, it drops. That's how I got that expression. I like to be very expressive. I like the name of the technique to actually tell you the function of the technique, like the instant restart, etc. Now what's important is high-grade copper is saying to us, well, let me just go to my black charts because I've got it a little bit more in depth. I want to go to HG.P. I want to go to the continuous contract because I want to see the weekly. You see the weekly chart right on the 200-period exponential moving average. If it breaks, it's going to go to 3.46. So this is going to be really important. The MACD is turning down, but it's still good. The stochastics just slipped underneath 74%, underneath 80%. I'm going to teach you the levels of the stochastic to be watching. I'm going to teach you about how important the MACD is. Look at the MACD right here in the, now I'm going to go to the white chart because it's actually printed up. It says MACD there. MACD, green, red, dark gray, that's the MACD right there. And the stochastic, the slow stochastic is right there. Look how the on-balance volume went to peak A, B, C, D, double top, kaplop. High-grade copper is pulling back. This is potentially very serious, which is what I've been saying for a while now. I'm very concerned that there's very limited upside. It's how support levels on the downside are handled that's going to be very important. It's going to be how the volatility index, the VIX, goes into the 19s and holds and then goes into the 20s. And right now, where is it? It's in leg C up above the 200-period exponential moving average at 19.20, having hit 19.65. The 120-minute chart, and this is what I show my subscribers to my opening call every single day. We look at these particular charts. Look at this. I explained, I've just taken out all the notation because I wanted to get in the chart pattern. Leg D up in the 120-minute chart says, okay, now we're getting a little bit oversold. Be ready for some kind of pullback if there is a peak D made in the 120 minutes VIX volatility index, and if it pulls back to the 18.50 area, you could get a pretty decent counter trend bounce in the market to maybe from the minus 260s it was to maybe a minus 197, minus 178, and then you're going to be very careful because that's where other things can happen. The S&P E-minis could go to, they're at 1406, they could go to 14.09.61. Now, what's really important in my work, and I love this part, this is the aspect that I really enjoy, is I love taking calls from subscribers or folks who have been to my courses before, and to anyone who's interested in looking at a chart pattern based on the ChapmanWave. When we get back, we're going to Mike in New York, and we will be looking at a stock that he's chosen, and I'll be right back here. I'm showing the chart as we go out. See, there's the volatility index, 120-minute chart. There's leg E, maybe trough E, the 120-minute Dow chart. There's the trend index. There's the daily and weekly and S&P.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be at 877-927-6648. And we have on the line right now, we have Mike in New York. Hi, Mike. How are you?
Good. How you doing, Basil?
Very well, thank you.
Before I get to my stock, did you see the 60-minute segment with that singer Rodriguez? Who's
I didn't see it this time.
In Cape Town.
In South Africa. I didn't see it this time, but I did see it the previous time. I guess this was a replay. Isn't that fascinating? This is the guy who didn't know how famous he was, right?
Yeah,
in
from
South
Detroit,
Africa.
from like the
right, from Detroit. And
project.
he was this big hit in South Africa. Of course, I haven't lived in South Africa for a very, very long time, since before apartheid was overturned. So, it was very interesting to read. And, this is I find it fascinating. I was talking to someone the other day about this, and I said, the United States, most people in America just do not appreciate that across the world, just like you can go to some little Zabukistan or whatever, just name a little place, and suddenly you'll see a Coca-Cola machine. Most people don't realize just how influential. When I was growing up, I thought of America all the time. My father had a Pontiac. We thought of ourselves in a certain way as Americans because we American movies. We had so many things. You don't realize just the importance that that jazz had been throughout the 1900s, throughout the world. That it was so. The cultural aspect of jazz has created an art form that is so purely American. Now it's international, but it was so purely American that for hundreds and hundreds and hundreds of years to come, jazz will be a musical art form, and it'll go through variations, etc., but it'll always be there as the cultural icon of the United States of America. It's not surprising to me that something like that would happen. I mean, I had all these rare records. I had gone through this phase when I was as a senior in high school. They were debating club, and my opponent was talking about mercy killing, and I was talking about abstract expressionism, Jackson Pollock and Ornette Coleman, and nobody, certainly my parents, nobody knew what the heck I was talking about. And I played these crazy recordings, and I showed these crazy paintings by Jackson Pollock. America's just always been an extremely influential country, and most Americans are now much less so. But when I came here, most Americans were very insulated, because I always said that my impression was that it was like 6 countries. You've got your Northeast, you've got your Northwest, you've got your Southern California whole area, you've got your Midwest, you've got your lower East Coast, and you've got your South. Sometimes, now it's better because there's been television and people have heard different accents over and over and over again. But there was a point where certainly I didn't understand anyone from the South, but I know that many Northerners that I was with in the same party didn't really understand what they were talking. They didn't understand what we were saying. So it's like 4 or 5 different dialects here in the United States. So it's just always fascinating to me. All right, let's get to the stocks. Do you want to look at?
Yeah, Brookfield Asset Management. I'm long the stock. I wanted to ask you when I should get worried about, this is the nature of it. It seems to be changing right here. So
well, I remember doing this. I can't find the notation. I was actually on with someone from TradeStation last night who was really helpful. His name's Israel, and he was fabulous. Because most of the time, since someone left there who had retired, it's very difficult to even explain what my problem is. And it's not really TradeStation. It's kind of the way my computer shuts down when certain things happen. Well, what happened was, I used to have Brookfield. Just to remind me again, they're in in REITs, but I think it's a specific sector. What sector were they in?
Real estate, office properties, infrastructure. It's sort of like a Berkshire Hathaway. They're in
everything. They're in about everything, right? Every sector, that is, of real estate. Yeah, that's what I thought, that they were pretty much one of the biggies, and hardly ever spoken about. That was my point, and I wanted to say that it was not a name that came on the tip of the tongue of anyone talking about real estate or REITs or anything in the area that Brookfield Asset Management is in. Symbol is BAM, B-A-M. The reason why I always remember it is because the Brooklyn Arts.
That's probably music.
So that's BMA, but that's the reason I remembered it. BAM. So it's trading at 34.04. It's down 59 cents. I've actually done all the notation fresh. I've done it on a white chart in case you wanted to print it out, because there are a couple of really interesting chart patterns here. And, I like this a lot. I liked it a lot. Now I'm looking at fresh. I want to do the positives and the negatives, and I'm going to explain to you what I'd be looking at. We'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and the Dow is down 254, just really struggling. S&P's down 23, so it's 1.9%. And 1.62%. So the Dow is even weaker. That's because of Triple M and others. So I'll be looking at those in a moment. But first, let's get back to BAM. That's what happened to the market. It's down. BAM is down 58 cents to 34.045. Now I recollect why I was fascinated with this. Besides the fact that I remember the BAM, it is because it is involved. Not only is it, and Raman the Den was kind enough to put this in, Brookfield Asset Management, Inc. is a publicly owned asset management holding company. Through its subsidiaries, the firm invests in the property, power, and infrastructure sectors. Its property business includes owning and managing office properties, developing master planned residential communities, and offering clients bridge and mezzanine lending, alternative assets funds, and financial advisory services. Through its power generation business, the firm operates hydroelectric power facilities, interconnections, and transmission facilities in Northeast North America and development of wind power in Canada. That's the part that I remember. Now, I don't know if I heard it because maybe Kramer had mentioned it or someone, because I certainly don't go looking for these things. But it did strike me that that was quite a potpourri of products that they have. So let's just look at it purely on a technical basis. And what I'm looking at here is that the monthly went from the trough of March of 2009, 1121, it went to 4 peaks, A, B, C, and the last one is peak D at 34.23, May of last year. It pulls back in a trough A, then a trough B to 24.42, and then it rallies again. There's a little minor, what I call a gray A, at 33.62 in May of 2012, but that is subsidiary to the major peak D, because when it pulled back, it didn't undercut the initial starting point of March of 11.21 back in 2009. So this could be a continuation pattern. This is something that I look at very closely. When it gets back to a modest new high, I have to put a parallel wave count here as E/B. Then I look at the candle of last month, and the candle of last month is a long-legged doji. I like to teach about this because it has specific connotations. But the most important is that even if it was to pull back under the 9-period exponential moving average, which was touched this month so far, 32.91 and 33.08 is the 9-period moving average of the monthly chart, it should come back and retest the body of the candle, which is at 34.52 to 34.51, which it has done because it's gone to 35.02 so far this month. So it is next month it is absolutely critical. If next month it takes out the low of the weekly low of 32.91, closes in the 32.30 or lower area, I have to consider the stochastic, which is at 88%, will pull back, and it could pull back to maybe 83%. If the MACD in the monthly chart will keep flattening out, but it won't turn negative just yet. It would have to be a deeper pullback. What it also says is that even if it rallies above the high of 36.49 of last month, it's going to come back and test the wick of this particular candle. So I'm looking at the upside as being rather limited. I'm also looking at the weekly chart that says the MACD and stochastic are actually quite negative. So you've got to be really careful because it's starting to trade underneath the 9-period exponential moving average. And what it would need by Friday afternoon is to close, doesn't have to be decisive, but it really has to close above 34.79, which really shouldn't be a problem if it's a strong stock. So let's look to the daily chart to say, okay, has the daily chart got the temerity, has it got the gumption, has it got the strength to actually push this particular issue into that area? And what I'm looking at here is, if there wasn't, now you can say ifs as many times as you want, but the reality is that there wasn't. I was going to say, if there was a rally today that went above Monday's high of 34.69, that would be really good. So I'm a technical analyst. I have no choice but to look at the chart and say, hey, stochastics at 81, that's a good thing. MACD is rallying, that's a good thing. Had price movement, that's a good thing. The greater tide so far says that until the 32.81 level of the 200-period moving average in the daily chart is taken out, the weekly and the monthly charts are going to be kind of okay so far. But I'm looking at the daily chart, and I'm going to say to you, I would not do anything in your position. And I probably will say to you, you could even have a stop because of 34.05. I see no point in rushing to get out of this, because if there is any rally at all in the market, this looks like a stock that really wants to participate on the upside. So let it tell you what to do. If it takes out today's low, 33.75, consider that that's not a good thing, because if tomorrow starts to slide to the 33.50 level, it's probably going to retest the 33.10 to 32.81 area over the next 3 to 5 sessions. So intermediate term is really what you like. You like to put in a position and hold it, right?
Correct.
Okay. So what I'm saying to you is it's market conditions more than the chart patterns that I'm looking at that are going to dictate what's next for the stock. The weekly chart has made a peak D. The technicals are negative. The monthly chart is still holding very well. The daily had a nice rally, and even today with the market down sharply, it's kind of holding pretty well. But I don't know what kind of stop you want to put on it. My first area of looking at a stop would be 33.50. But absolutely, the 32.81 area is going to be really critical, because if it takes that out, I've got a weekly sell mode, not a sell signal, but a sell mode in place, and the monthly chart will automatically be saying, heads up, there could be a double top here with a sell signal based on the candle of last month. So what you really need to see is by Friday afternoon, it avoids any more selling, and it actually pushes above 34.79. Wow, if it does that, that's going to be a really good sign. But I'm saying if it does that. So those are the parameters I look for. It's just, I think market conditions are probably going to pull it back a little bit, but that's what I'd be looking at. I hope that helps you.
Yeah, very much. Thank you very much.
Thank you very much. And good eye, because it really looks like one that, with a dividend of 1.8%, it has the potential, but I wouldn't mess around. If it's giving me weekly sell signals, I'm out of there. Thanks for calling, Mike.
Good advice. Thank you.
Thank you very much. Now, Art in the den asked for LCC. I think that's the airline, isn't it? LCC. I don't know if I don't have it here for sure. All right. So LCC, yeah, U.S. Airlines Group, they're always changing their name and they're always going broke. I remember going down to Florida to, I had something to do there, and Tom met me, and we were driving by the airport. This is about 7 years ago, maybe even 8 years ago. And as we drive past the airport, I think it was U.S. Air or United or one of the airlines once again had gone filed for bankruptcy. And I remember Tom saying, as long as I've been in this business, they are always going broke. They have a business model that says, we will just take everybody for a ride. We ourselves will do very well, but just don't count on us staying in business. And he's absolutely right, except there's a difference now. For the very first time over the past 2 years, you've seen them go a la carte. That a la carte is the business model that many firms are going to try to emulate. And what it says is, we can charge you just a low fare, but wait until we add up everything else, because it'll really cost you. So U.S. Air right now, I'm not sure if you're looking at wanting to go long because oil prices are coming down, but right now LCC is the symbol. It is U.S. Airways Group Inc. It's trading at $11.64. Funny, the weekly chart has the same thing as, I need to change now, A, B, C, I believe that's not D, that's D. Let me just do this. See, it's the same chart. We've got this over and over again. We've got in the ChapmanWave, you've got those peak Ds or peak Es showing up in the weekly charts as the technicals are pulling back. I'd be really hesitant to do anything with this. Now, let me just go to the weekly before I really commit myself. Okay, so there's your lowest, most identifiable low bar, most identifiable low bar. That'll be peak A. That'll be peak B. That'll be peak C. It pulls back. Minus C minus because it pulled back too far, and it goes another A, gray B, and if it breaks above 1222, the high is 1217 today. That would start leg C. Okay, now what do? Oil's coming down really sharply. Oil's coming down really sharply. It should benefit the airlines. At the same time, I think we're coming in here to I think we're into not a recession, but we're into a consolidation phase in the economy and the market. So the question is, let me ask in the den, Art, are you looking to go long? You're looking to short it? I'm not so keen on shorting a $12 stock. Percentage-wise, it just needs a big pop up and then you're out 15% for no reason. And you see the stochastic is at 64%. It did not participate on this last move. That tells me you got to be careful, because if it pulls back to 1125, it's at 1161. Immediately, the candle of the 11th of October, 1101 is the low and 1152 is the high. So I'd be real careful. You know what? I don't see that much upside potential right now. If you're in it at a lower price, then just put your stop in. I put one stop at 1132. It's at 1161. And absolutely, I'd be out of it if it went to $11. Personally, I would be avoiding the stock right now. It's moving up without the technical veracity it needs. Weekly chart says, I could deflect lower. And the monthly chart says, hey, not a bad chart. Technicals are not that great, but I am sitting above the 9-period exponential moving average. I think market-wise, I would say, if you're asking my opinion, I would be avoiding this stock. If you are in it, I'd have a small position, tight stop. The moment, if it goes to 12.23, raise that stop to about $11.90 or even $12, because it should continue. That'll be leg C, should go to a D. I just don't know how deep the pullback will be. So I hope that helps you. Now there's another question. So I had a question here, VLO. I hope that's already notated. Yes, it is. So VLO is Valero. What is it now? Valero Energy. It made a high back in 2007 of $76.68. Pulls back to 30. It doesn't pull back. It drops, cascades to 13.94. That goes into 2008. Tries to rebound, makes the H pattern that goes to an M pattern, and then finally breaks out above the 200-period moving average, and it goes to a peak C. And then what does it do? It takes almost a year, and then it goes to where? Leg D with a doji candle. And that D is, at least in the monthly chart, it's a good sign, except for one little thing. It's pulling back right here, back to the 9-period exponential moving average of about 27.87. So that's the monthly, which says, hey, nice move, could be over for now. Let's look at the weekly. Peak D. Folks, you want to learn about these chart patterns? How many, just in the last 2 weeks, how many dozens and dozens and dozens of charts have you seen that have gone to at least a peak D and then they pull back? We just saw the monthly. Now we're looking at the weekly. There's a double cup formation, goes to higher highs and higher lows, left side, right side breakout, goes to leg D at 34.35, the week of the 14th of September, and pulls back sharply with a stochastic way at the 57% level, and the MACD just now, the week's not even close to being finished, expanding between the fast-moving average and the slow-moving average. Aha! So that says 26.38 is absolutely important to hold and be a bounce-off area, hopefully not even getting there if you are long. My eye says it's going to get there. So now let's see if I'm correct by looking at the daily chart. And the daily chart says, ChapmanWave dreaded H, that lowercase h formation. Let's just finish up and see what we've got here in the... So that's 29.28, is that it? 29.26, 29.25. So that's D. That's peak D. E. F. And then in the ChapmanWave, there's a technique that I call the smooth peak G. In my CD introducing the ChapmanWave methodology, I talk about that. And what's very important about the peaks is that within the concept of going to a peak F, that's the sixth highest peak, every once in a while you get an extension of that. I don't know if I can find it in the time that we have here, and that says you got to be careful, because at any point at a peak F, if there's just a mild pullback and the MACD is still moving up, you could get within 3 bars a sudden move to the upside that could be, in this case, I'd have it parallel G or C, but if it's a peak G, within those 2-3 bars, the characteristic is it goes to a new high, it starts to pull back, and within 2 bars, you get the ugliest candle, and that, in fact, turns out to be your down arrow, and that's exactly what happened here. So now let's do this. We'll look for the retracement right shoulder failure. Where is it? I see 26.76 in the cards for VLO. That was quick. I'll be right back. Basil Chapman, 8779.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman here, and yes, that was VLO, Valero Energy, trading at $27.97, down 150. And what is quite important about this is that there's a left side, right side price time match, which should take it to, should take it to 24.66. It's 27.95, and that could happen fairly quickly. If it takes out, if the 26.76 200 period exponential moving average in the daily doesn't hold, 26.04 is next, takes that out, and by the end of the month, you could see this down at that 24, what did I say it was? Whatever it was, 24.67, 25.20 to 24.80 area. Now, what will happen? The moment that happens, you've got a definite confirmation of a sell signal to sell mode. We're already in sell mode, in the weekly chart. And that says that any rally should just be a retracement bounce. That puts it in direct conflict with the MACD trying to hold positive, and the stochastic, the beta between the fast moving average and the slow moving average of, and I'll teach that in the Master Trader series coming up in the beginning of December, the 6th and 7th, Thursday and Friday. Check your front page, because these are just easy things to see. It's just a visual scan. You look at it, and there it is. You can use other techniques. It doesn't matter what the techniques are, but the core of the ChapmanWave is so robust that you can really put almost any viable technique together with it and get something really positive. I was asked about Triple M. Now look at this. One of the reasons why I'm very nervous about what we're looking at here, based on my monthly charts, is that when I'm my core Dow Quartet index, I call it an index, just a made-up thing, of General Electric, IBM, Triple M, and UTX, when that's starting to stall as sharply as it has up until now, that says you've got to be very careful, and I'll explain why. Because right at this moment, I don't have to wait until Friday. I can say that I'm putting a down arrow for peak D. Once again, there's a peak D. Just keep adding them up from the low bar in at 81.99 in Triple M back in the week of the 8th of June. And there was also an 86 round number low, which is a very good clue that if it could hold 86 close, if it could hold 86 on a closing basis, that would be very positive, and it did, because I teach about round numbers, etc. So it went to a peak D the week of the 12th of October. Now it's way under the 9-period exponential moving average. The monthly chart, this on the white chart, I haven't finished all the notation, but from the low of March of 2009 at 40.87, it went peak ABC, then it squeaked to D at 91.49 in October of 2010, pulled back, held the 9-period moving average. I'll teach you about those moving averages. In fact, you get my webinar free for the moving averages. And then it goes to E and F to 98.19 in July of 2011, plummets down to 68.63. No, it pulls back very sharply. Plummet is those stocks that we saw that go from 80 to 9. In this case, it charges down, holds way above the 200-period moving average in the monthly chart. This is 3M. And what does it do? It goes quickly to A, B, C. Now it's in leg D. If in October, Triple M doesn't close nicely above that moving average, which is now at about it's at about 89.55. Right now it's at 89.45. If it's not able to close somewhere in the 90.80 area or higher, but instead if it closes at 87.37, all of a sudden, I've got Triple M saying in the monthly chart, whoa, be careful, I could be making a pretty significant top here. Then it would target the 83.50 area, 200-period moving average. Stay tuned now. You've got Victor Jones Options with TD Ameritrade, a fabulous, fabulous show. I'll be back tomorrow at 11 o'clock Eastern Time. My service is the opening call, and please check out...
Are you looking